Welcome back, class, from the ad break. I have a few new words which I need to bring to you. And here is the first one, electronic funds transfer. What is EFT? It is a system of moving money from one account to another. So when you move money from one account to the other, we call it EFT, electronic funds transfer. Here's the second word that I want you to know, a bank statement. What is a bank statement? It is a record of money received, money paid, and the balance that is in a bank account. All right. Now that you know these new words, I want us now to quickly move on to the definition. What are we talking of when you talk about the cash receipts journal? It is a journal in which all cash received is recorded. When we receive cash, we must record it in the cash receipts journal. You will hear some people say CRJ. It is just the shortcut of it. Abbreviation, CRJ or cash receipts journal. Now, what is a journal? It is a book in which transactions are recorded. Now, it is very important that we touch on what we call source documents. All right? Now, each transaction that takes place must be recorded on a source document, and all necessary information must be written down, namely. So, this is the information that must be on the source document. The date, very important. The amount, very, very important. The name of the person that is involved in the transaction, and the reason for the transaction. Now, it is very important to know that source documents are part of what we call internal control. All right? Source documents are part of our internal control. Now, the first one that I'm going to elaborate on today is called, if you can see it, it's already written there, a bank deposit slip. What is a bank deposit slip? It is a small paper or a form that a bank customer includes when depositing funds into a bank account. So when you walk into the banking hall, you want to deposit money into your bank account. At the bank, they'll give you a small paper, and you fill in the amount of money that you want to give to the bank teller. That small piece of paper is what we call the bank deposit slip. All right. I have a second one here with me, and you can see already, this must remind you of what you see in some shops. It is what we call a cash register tape. It is a slip from the cash register used to record cash sales or services rendered. You would normally see this when you go buy something from the shop. You get a slip from the shop, and then the business will keep what is called a cash register tape. That is a slip from the cash register. Okay? And then I have now another one which is now exciting. I think you can see this one already. You can see, you have a clue already. It has the name of a bank there. What is it called? It's called a bank statement. A bank statement. It is a record of money received and paid to the bank account. So when you have a bank account with a bank, when you put in money, the bank will record that money on a bank statement. And when you take out money, the bank will still record that money on a bank statement. And then upon your request, you can then get that bank statement showing a record of the money that you have received as well as the money that you would have paid into the account. Now, I want us now to quickly go and see if I am to talk of the last source document. I think you can see it already there. Okay, what do we call this? This is a receipt, all right? This is a document issued from the receipt book, all right, of the business to the person or company from which it received money. So in most cases, it is used when you receive money, and then you need to give that particular person a source document as well. So you give them a receipt, all right? In this class, we're going to be referring to some of these source documents. So it is important, dear learners, that you remember these source documents. Okay, now I want us to quickly now move on to how does a cash receipts journal look like. There it is. Okay, so I'm going to start it off with the transaction. The important things, the first one, there is your date. And then it reads, Mpo started her business, Mpo Plumbing Services, with 50,000, which she deposited directly into the business bank account. Where was the money taken to? Deposited into the business bank account. All right? So when we record now into the CRJ, here's the CRJ from Post Plumbing Services. There it is. Now, the first column, this is your document. It is now saying, when you are recording this transaction, where did you get the information from? So we got it from the bank statement. All right? And the date here is the 1st. The details, we now want to know the name of the person whom our business is receiving money from. In this case, it is Mpo. So you'd find here, we write Mpo. And then the analysis column is left out. Why? Because the money was deposited directly into the business bank account. And then you'd find here we have 50,000 now into the bank. So you have your 50,000 there. And my current account column is left blank. Why? Because the current account is for money that is received for services rendered. But this money that was received, this 50,000, was for capital. So it will come into my sundry accounts. I put my amount, and then here I say capital, deposited to start a business. So hence it will be called capital. I want us now to quickly move on to another one. I want you to look at this. It says, and the information reads, on the 3rd of February, Mpo Plumbing Services received 11,500 for services rendered to a customer. All right? So already you can see our date is the 3rd, and the details, services rendered. And then we quickly come now to our analysis of receipts, which is going to be 11,500. And then the bank is also 11,500. Current income, 11,500. Do we take it into the sundry accounts? No, because we have the current account column here. I want us now to quickly move on to another one. And it reads, Sarah Maroti has started a flower selling business called Nature's Joy. On 1 March, Sarah Maroti started a business by depositing 200,000 into the business bank account. All right? If we're to prepare the CRJ, here is how the information would appear. So I'm going to start. Here is my document. Here is my date and my details, Sarah Maroti. All right? I come to my bank. How much was put in? 200,000. That 200,000 comes now to my sundry accounts, and it is for capital. Very, very important. Okay. Now, it is very, very important, dear learners, that you know that when recording capital transactions, it is the same for a service and a trading business. Okay? So you do it exactly the same. Okay. Let's look again at another one. It says, on the 5th of March, we sold goods for 18,000 to a customer. The cost of goods sold is 12,000. So here we have two amounts. We have a selling price of 18,000 as well as the cost price, which is 12,000. When we record, remember, it is details, sales. On my analysis of receipts, you will see that I'm going to bring the same 18,000 here. I will bring it here on my analysis of receipts. In the bank column, the same amount will appear again, that is the 18,000. Because this is for sales, I'll have 18,000 under my sales column again. But when I come to my cost of sales, I'll record now the cost that I am given, which is 12,000 over there. I want us to quickly go, and I want us to look at something very, very interesting. Okay? If you're posting to the ledger, how would you do it? This is how you would do it. You would rely on what we call the dead click. The dead click. And the dead click reads as follows. We debit all. We are going to debit all. expenses, that is the E, all assets and all drawings. But we will credit all liabilities, all income, as well as all capital. Okay? Now, I'm going to quickly go for an ad break, and when I come back, I'm going to continue with you. See you in a short while.